Okay, we're going to talk about the sales process. How do we set up customer records in the customer center? How to record cash receipts and the like. So let's begin. When we are complete this unit, we will know how to set up customers in the customer center. And as you saw on the main screen, there's a customer center. We will add record record on sales receipts. We're going to use the undeposited funds to track our cash receipts, and we're going to record invoices and payments from customers. We're also going to record the bank deposits of checks, cash, and we might even do a couple examples of credit card receipts. It all begins with a sales receipt from your customers, and those sales receipts generally are a result of an invoice from a credit customer. So what we're going to be doing in QuickBooks is tracking both, all of that information within the QuickBooks system. Let's take a look at the workflow, how things run within the module. As you know, it's five parts to this home screen: the vendor section, the customer section, and the employee section, banking, and company section. Well, right now we're going to be in the section called customers, and you'll see when you're looking through, when you're in the QuickBooks module and you're at the home screen, you're going to see how the arrows point and guide you at the direction that you need to go. Very, very useful. So the process that we're going to be working through is going to be the invoicing, receive, as well as bank, record, deposit, which is more or less a linear process. And this is just giving you really a top-down approach of how the sales process works. And it obviously begins with customers. On the cash side, we can look at how things are done. And you can see when you're dealing with cash, you don't really have some transactions until money is actually received. But on the opposite side, which is the accrual basis of accounting, you'll see we record our estimate if necessary. We record our sales orders, and then we create an invoice once the work is done. And then sometime later we receive payments, and those payments we receive we apply to our undeposited funds and deposit them into our bank account. Setting up the customer looks very similar to a lot of different lists that we may create, obviously starting with a customer name and other information that you'll need. Clearly, the more information you provide, the better the information, the more detail you can track. So I highly encourage using those additional tabs to create information that you can use and track. You obviously provide the name, address, telephone numbers, maybe website address, and contact person from that bar. If you're using job cost information, you'll also be able to do that within the customer center. But just to make certain that you know, the additional information and the payment information is optional data, but it's highly recommended that you complete it simply because it provides the most detail that you'll need to track. And you can obviously use track jobs. You don't have to do this. And if you later decide to start tracking jobs, you can go in on that individual and track jobs. Very, very easy to do. QuickBooks is quite forgiving if we forget to do something. It provides you with more information and ways to track than you need, but it's always good to know if you change your mind, you can do so very easily. Therefore, let's record a cash receipt. And when you look at these screens, they're called the screens that you're keying information, they're very similar. I mean, the setup is extremely consistent. Going to have the customer name, the job, the class, and the template that you might use. Obviously, the name, address, and invoice number, and then the details for the transaction, which would be the products or services that you provided in the end. So it's easy to do this. I mean, it's just very, very straightforward, very easy to follow. Everything is there for you that you'll need. You can actually print from the screen. You can view the actual invoice itself or the sales receipt itself prior to printing. And if you make a mistake, you can go back and fix it without any major problems. And it does give you a history of paying, and that's on the far right-hand side. It gives you the history of that particular customer. The undeposited funds are a temporary account where it holds your money until you decide to move it to the appropriate account. It does allow you to track checks and credit cards before they're deposited. You can group everything into the deposited funds, or you can deposit to bank accounts, or you can group with other undeposited funds. And again, it's all about making your reconciliation easier, but it's again company policy or your internal controls functions that will determine which process you use. But we'll learn them all. And this is just a diagram of showing you how the funds are flow through the quick check, actually flow through the QuickBooks, as well as moving it from an invoice and payment to a sales receipt. And depending on what option you use, making that the flow or the process that'll get you to your bank statement deposit. But even before we actually provide a deposit payment, we have to create an invoice. And as you can look at this, it looks very similar to a sales receipt. Very simple information. Customer information is needed, your class, your invoice number, your date, and obviously the details of that transaction. Very, very similar. And I love that about QuickBooks, because you don't have to think about it. You don't have to ponder. The setup is consistent from module to module. It makes learning the process very easy. So if you receive money from your customer, you can receive it in the form of a check. You'll need to learn how to handle partial payments, and you need to learn how to process payments that are made by credit cards. And there are times when a customer pays within a certain discount period. You need to know how to record customer deposits, and so that the customer balances will be zero once the payment in full has been made. So here is a customer payment, and again, the process looks very similar. You'll have to put in the individual, the amount that they're paying, and the form of payment, and then invoices that they are going to pay by selecting those by using your check mark. Put the date that conforms with the deposit and the check number. And then if you're done, you can click Save and Close. Now, if they underpay for some reason, they give you options to deal with an underpayment. Now, depending on why a customer is underpaid, it could be a deposit, it could be a return. If that underpayment is an error and you believe it's an error, you'll leave the deposit as underpaid and contact the customer to see if they can write another check to pay off that amount. Or if for some reason they're not satisfied and you give them a discount, you can, within the module, write that amount off. You don't have to wait and go back. You can do it all at the same time, which is another efficiency that I love in QuickBooks, because everything is on the same screen. There's no switching to different screens to get certain things done. You can do everything you need within the customer payment process all on the same screen. Now, and when you have a payment by credit card, you obviously have to work with Intuit to set that up on the internet, because they'll automatically log onto the internet and charge your card and give you the authorization number and load the database accordingly. So this would definitely hinge on your ability to use the internet to communicate with Intuit, who will process the transaction. So where do the payments go when you actually make those payments? It goes in an undeposited funds, and it is going to be your default account until you decide to move it. So your bank account won't be moving until you receive payments. And when you receive payments, you have to go to make deposit. That's when the money actually moves from undeposited to deposited, and it hits your bank account, and the bank account that you choose. And again, using preferences to tell QuickBooks way before what you want to do with deposits and how you want them to flow through your system. And on the bottom it says here, apply payments automatically, automatically calculate payments, or use undeposited funds as a default. And most people don't want to do that. They probably just want it to go directly into their account without any other pressures. But if you have a customer or you have a company that you have certain people doing certain functions, it's extremely useful because you can segregate duties quite easily in the system. Discounts and credits. Again, if a customer pays within the discount period and they pay the amount full less the discount, you're going to see this a discount balance showing up on the account. Therefore, when you actually apply payments, you want to get that underpayment or that discount applied to that invoice. Therefore, the invoice will be zero at the end of the day. And QuickBooks will automatically calculate that for you. So once they pay their amount, you apply the duration to discounts and credits. Now, again, depositing checks in cash, holding cash back from deposit, and printing deposit slips. These are all automatic processes within QuickBooks. Let's take a look at how it looks on the screen. Now, here you want to make a cash and check deposit. And again, you're depositing a number of individual checks, not just one customer. You tell it where to go, and if you have money that's going to be coming back to you, here's is where you would actually put that in it, so that the amount of the deposit matches what you actually put into the bank. Any cash that's left over is recorded to their proper account, and everything balances. Again, this is accounting, so we can't get around accounting in this. This is all about accounting. So you're going to have to account for every dime that you get in, whether it goes directly to the bank account or a portion of it goes in the bank account and a portion of it goes back to you in your hand. And once that's done, you generate an output, again, another audit trail that you will attach to your deposit ticket from the bank and your copies of your checks, and this will be your deposit slip summary report. Credit card processing, again, it will be an upload to the Intuit, which will charge the account and give you an authorization number. But then in your port, you will have to use the charge account. Your payment has to be applied less any fees associated with that deposit, credit card deposit. And using quick math, again, if you look at this screen here, quick math allows you to do calculations as if you were using a calculator. And by pressing a key on your machine, you can actually multiply the discount so that you can have that discount show up as a separate line item in a separate account category. And you, instead of you seeing a net amount, you'll see a gross amount less the fee, and then you would see the net. And that's good for audit trail. So the main things about sales and tracking sales is knowing how to set up your customers, recording your receipts, recording your deposits, and also recording invoices and payments from your customers. And at the end, once all of that's done, recording your bank deposit of cash, check, and credit card receipts for reconciliation at a later time. Thank you for listening, and we will be going over this along with other transactions. If you have any questions, post your questions in the Q&A section online. Thank you.